There's a lot to talk about. We got PPI, we got CPI, we got Fed minutes, we got the stock market, obviously TSLA. That's what we're really talking about. How does all this fit in? What's going to happen moving forward? And what should we be on the lookout for? Welcome back, everybody. If you're new, my name is Nicholas, and this is Investing Against the Grain. For any of you who are new, we got a lot of new subscribers recently. This channel is all about two things. One, investing for the long term and making sure that we understand what we're doing with our money, investing in a different way. In other words, I invest very heavily into certain stocks, such as Tesla, such as Amazon, such as Apple in the past. Right now, I'm all in Tesla. Other than all of my real estate assets, I am financially independent. And this channel is really about taking you along with my journey. And hopefully you pick out something that I'm doing that resonates with you and you can go along your journey as well. The second thing this channel is about is I'm an engineer. My background is in mechanical electrical engineering. Then I switched over to become a software systems engineer. And so I try to take a lot of the things that we learn about Tesla and unpack them here whenever it seems relevant and appropriate to talk about in relation with the stock price. All right. So with that said, and welcoming all of you new subscribers, let's talk about a confession I need to make before we dive into all of the macroeconomic things going on and Tesla stock price itself and earnings next week, which, by the way, if you guys want to watch our earnings bonanza, our mega stream, if you will, we're going to have Farzad, we're going to have Gary Black, we're going to have Ross Gerber, Alexandra Mers, the guys from Good Soil, Emmett and Matt will be on there, Yash will be on there. I mean, it's going to be a blast. Obviously, I'll be on there as well. You can find a link to that right here, maybe over here, one of these, and then you can just go ahead and register for it or just sign up for a notification. You'll be notified whenever we go live on October 19th. That's next Wednesday. Now, my confession. Okay. Listen, for a lot of you who have been regular viewers of the channel know I just got back from my wedding in Greece. And after we got done getting married, we went on our honeymoon in Mykonos. Well, on our last night in Mykonos, we went to this nice restaurant and we were having our meal. And as the meal rounded out, the owner of the restaurant came and talked to us and just say, "Hi, how's it going? How's everything? How was the meal?" And this led into a conversation one way or another. And he walked away and brought us a gift. So he gave myself and my wife these bracelets, the bracelet I'm wearing right now. And it's supposed to keep away like kind of evil energies and stuff like that. Now, I'm not somebody who believes in a lot of this stuff. I'm an engineer, so you can imagine the way I think. But so I didn't think much of it. And so I took it off essentially when we got back to the States, and because I'm not a jewelry person. It's not who I am. So anyways, I took it off. And then the whole week we saw the whole crash of Tesla back down, away from the 300s, back into the 200s, all the way to almost the 100s, as we can see right now. And the other day, my wife pointed out, "Oh, you notice that you're the reason the stock price fell, right?" I was like, "What? How's it my fault?" Obviously, I know she's joking around, but I was curious. And she said, "Well, you haven't been wearing your bracelet, and ever since you took it off, we haven't had a single green day." So I put it back on this week just to see what would happen. And of course, we had some more red days. And so then I noticed she took hers off and she thought it was funny. So today she put her bracelet back on and hey, lo and behold, we have a green day in Tesla. Even if it's eking out a little something, I'll take it. So we will be keeping these bracelets on to go through tomorrow, CPI, through earnings, and really until we feel comfortable again with Tesla stock price and the market in general. So I'm sorry for all of you if I've created any margin calls for any of you. Apologies. That's on me. Next time we see each other, we'll grab a drink, a beer. If you don't drink, we'll do something on me. All right. With that said, kind of jokes aside, let's talk about what happened today because there potentially is room to celebrate. So we got the PPI results today. So the PPI, what it really is, it's essentially a wholesale way of taking a look at inflation to companies and the products that they have to purchase, right? It's just another inflation gauge. You don't really need to know the intricacies of it. But what you need to know is that it came in hotter than expected. Even core, when you strip out food and energy, came in hotter than expected. So what happened here? Why did we not have a complete meltdown in the stock market? Well, we did briefly, but then it rallied back. So I found that interesting, and I'll explain to you why in a second. But then later on in the day, we got the Fed meeting minutes. All right. So essentially an account of the last meeting that we had last month. So this is a month-old recording of the minutes of the meeting. Pretty straightforward. But if you read through it, none of it sounded too optimistic. I mean, I know some people are pulling out a dovish thing there, or in other words, a bullish thing here or there. But in reality, it said exactly the same stuff that we heard in the meeting, okay? They anticipate on having increased rate hikes. They anticipate on having rate hikes be sustained for longer into 2023. And they don't think their job's anywhere near done. They're going to raise rates. It's going to be 75 basis points in November. It'll be a 50 in December. And it'll be a 25 somewhere in 2023, probably February, March timeframe. All right, so again, not good news there. PPI, hotter than expected. Yet the stock market held up. Yet Tesla went green. I know you're thinking, well, you wore your bracelet. All right. But other than that, it went green. So what does this mean? Right? Is this a contagion point? Are we at a point where the market is essentially saying, whatever, we don't care. I don't care how bad the information is. I'm not selling my stocks. They're low enough, right? Imagine you get to a certain point. Right? Like imagine you had 1,000 shares of company XYZ, 1,000 shares, and it went all the way down to $1 a share. Are you going to bother even selling that if you get bad news? No, you're not. You're going to say, whatever, I'll ride this out. I'll just hold on to it. What do I care? We might be in a point like that, right? Essentially an oversold moment right now in the market, especially with Tesla. Tesla has sold off dramatically over the last, call it week and a half, 2 weeks. Is it warranted? Well, let's think about this. Deliveries, okay, there was some fear there and turned out to be nothing. China demand, well, there were some worries there and it turned out to be nothing. Okay, all-time record, yep, they definitely did that. On pace for 50% year-over-year production, yep, they did that. What about deliveries? Well, maybe not on target for that 50% year-over-year, but they could get pretty damn close. They might get 40, 45%. So there's a chance there. And we have to keep in mind, right? We can't ignore what happened in the past. We had Giga Shanghai locked down for essentially 2, maybe 2.5 months, and then they have to ramp up, right? So there's a lot of delays there. But still, don't count Tesla out just yet with that. Okay, so all that's good. How's their debt? Well, it's still none, unless they do a share buyback. We'll see what happens there. But still no debt. Margin's still good? Yep. Demand's still good. Germany, Austin still ramping up. Elon, healthier than ever. He's intermittent fasting. He's lost a lot of weight. Looks great. He's on Twitter. Seems to be in a great mood. Okay, so why did Tesla sell off? Well, for no good reason regarding fundamentals. The only reason it sold off is because of the macros. And if, in general, the macros are starting to say, whatever, we're oversold. We don't care at this point. We're not capitulating. Well, that might be a good sign for us, especially going into tomorrow. Tomorrow's CPI. So tomorrow is essentially the main event for what today was. Today was PPI. It's like, all right, cool. It's important, but we don't need to focus on it too much. Most of you probably never even heard of PPI or CPI until, well, this year, because this year it matters. This year we've all gotten very, very educated on the Federal Reserve and on inflation metrics. So with the CPI tomorrow, the Consumer Price Index, if you don't know what that is, you have not been in the market in the last year because everybody should know what this is by now. But if you don't know, it's essentially a attempt to measure inflation. I say attempt because it's not a very good way of measuring inflation, in my opinion. But nevertheless, it is what's used. It is what the Fed looks at. It's what the U.S. economy will essentially determine whether or not we have higher inflation or lower inflation, see which way it's going. So tomorrow, I think the consensus is that we will have a reading of 8.1%. That's a 0.2% growth. Okay. What would that mean in the big scheme of things? Well, 8.1 would essentially just be nothing. It would be like, okay, whatever. It's a nothing burger, as Yashu would say. So 8.1 or below would actually be kind of good news. 8.1, right, essentially just what expectations are would be good news because, one, it says we're not getting worse, at least, but it's not exactly going to be anything bullish because it's not enough of a metric to make the Fed think, okay, maybe we don't need to raise rates as aggressively. Maybe we can stop soon. However, if we see a print lower, if we see something with a 7 handle, maybe we get a 50 basis point rate hike instead of 75 basis point rate hike out of the Fed come November. I'm still of the mindset that the Fed will U-turn in some way or format before FSD beta goes wide release. And if you know me, you know I think that's at the end of this year. So I think the Fed will U-turn before the end of the year in some way, somehow. All right, I think they're going to get lots of pressure from all of the other world Feds. Right, we see what's happening with the Bank of England, and don't mistake the Bank of England for a Bank of England. It's their Federal Reserve, if you will. And they essentially are telling the UK, all these pension funds, we're not bailing you out. You have 3 days, Friday. You have till Friday to essentially make good on your situation. All right. So, but all these other Federal Reserves from all these other countries are going to start applying pressure on the U.S. You better believe it, especially as their currencies are dwindling and the U.S. dollar is soaring. So I think there's going to be a lot of pressure. It doesn't need to be political pressure from the Democrats going into the midterms. It can be pressure from the rest of the world. And I think the Fed will end up listening to that. If for no other reason, because we clearly see that inflation has slowed down. It's very obvious. Sure, maybe it's not obvious looking backwards. Maybe it's not obvious because it hasn't made it through yet. It hasn't made it through to the numbers. But look at housing, right? Housing applications, mortgage applications are cratered, right? Every single time I see it, -2%, -1%, -5%. It's just declining. Home prices. I look at Zillow every single day in this one little rich area, this little rich community. And I use that as a bellwether, if you will, because I know once that area starts to capitulate, that really tells you housing's hurting, and it's been capitulating. All right, I saw 2 houses that were listed for, and these are like old houses that you would tear down and rebuild, but they were listed for like 1.1 million each of them. Nothing special about them at all, nothing, right? And now they're down to 850. So we are starting to see home prices definitely come down. We've already seen lumber come down. We've already seen drastically container shipping costs come down dramatically. We're seeing metals, minerals, mining, all that just come down dramatically. So it's eventually going to make its way through to the numbers. It's going to. Now, the other thing too is don't forget about retail. Now, I think that comes out Friday where we'll get some idea of the inventory levels that they have, but retail has been having just stockpiles of inventory, right? We've seen it with Walmart, we've seen it with Target, right? Now we see it with Nike. It's going to continue to happen. We're going to continue to see this. And whenever they have this big inventory buildup, guess how they get rid of it? Well, they have to lower prices. And guess what that is? Deflationary. So I think we're seeing this throughout the entire economy. We are just waiting for it to make its way through the numbers. And we know it's going to because eventually it will, right? Eventually it'll happen. But a lot of these things are just lagging indicators. So my not financial advice to you, hold on. Do not capitulate now when we are at the lows, if you will. I'm not saying we can't go lower. What I'm saying is we are essentially retesting the lows of what was it? March, April, June, sometime period back then. We're retesting those lows. This is not the time to take up the strategy of buy high and sell low. Don't do that. All right. This is the low. This is when everybody says that to you, say, oh, you should buy low and sell high. And you're like, yeah, obviously it's a no-brainer. Okay, well, right now I'm looking at you and I'm telling you that, oh, it's a no-brainer. We all know that these are the moments. This is why that phrase occurs, because this is when it's really hard not to sell low and buy high. This is a perfect example of it. So hang on, all right? That would be my non-financial advice. Hang on, okay? Unless you need it for an emergency, unless you're getting margin called, unless there's some extraordinary situation going on, hang on. That's my non-financial advice. Now, let's talk about Tesla. After tomorrow, we might be clear sailing. What do we have? Well, We have earnings next week. And again, I'm not going to go regurgitate everything I just said because I want to wrap up this video so you guys don't spend all day listening to this guy. But Tesla has nothing but good news to come out, is what it seems like. Now, as long as they give good guidance for Q4, good guidance for 2023, calm the fears of demand, and maybe even throws a bone. Hey, we had record this. Hey, we had record that. Hey, we are doing whatever. Maybe there's a share buyback. Who knows? But as long as they just conduct themselves as normal, have a normal conference call, which is all we need, a normal Tesla conference call. Not a Elon says something to spook people. Not a, well, we did this, we did that, demand looks soft. None of that. Just a normal call. Tesla's going to be fine. Tesla will be ripe to run. And then you have, by the end of this month, this Twitter saga nonsense will be over. Whether you think it's an overhang or not, at the very least, it'll be over. All right. So for Tesla, I think there's a lot of good things ready to happen here. Tesla is going to, in my opinion, is the best company right now to weather this storm, especially with their balance sheet position, especially with their growth, especially with their demand, and especially with their leadership. So for me, I'm not touching anything. If anything, I just moved even more money into my brokerage account because if I feel like we're going to start moving up and, we've more or less just double bottomed here, I'm going to be picking up some more shares because why not? I like to feed on discounted Tesla stock. All right, we're going to leave it there. If you enjoyed this video, don't forget to like and subscribe. I love you all. Peace.